tells you? Passing the eval isn't the hard part. I've been funded over a dozen times, across multiple firms, and I can tell you firsthand, staying funded is where 95% of traders crash and burn. Not because they're reckless, but because they never built a system to stay funded. They keep making the prop firms rich instead of themselves. The rules, the pressure, the psychology. It wipes most traders out before their first payout. But there's a smarter way to play this. One that keeps your spending low and your edge intact. It's how I started stacking payout after payout without gambling, without overtrading, and without blowing accounts. Here's the exact system I used to turn a $100 eval fee into thousands, month after month. First, you have to treat prop firms like a business. Every dollar of your own money that you risk is intentional. It has to be useful. Because look, before prop firms, you needed to dish thousands of your own money in a brokerage account to make any money from trading. Now, evals can provide you with the same amount of risk, or more, for a few $100. Prop firms weren't really a thing when I started, so I had to do it the hard way and risk thousands of my own money. But can you imagine how much more advanced I'd be now if I'd only have to front a few $100? This is ridiculously powerful if you use it properly, but most traders don't. They blow eval after eval and spend thousands with nothing to show for it. Now consider this. Your evaluation fee is your only expense. The only thing you need to spend money on to make thousands of dollars a month, and potentially tens of thousands of dollars a month, is this small fee. But this fee can suck money away very quickly. The first step to being profitable with prop firms is capping the amount of real money you spend, having a budget. So let's say, for example, each eval you buy costs you $100. And let's say your monthly budget is $400. That means you can buy up to 4 evals per month or 1 per week. If you fail all 4, you lose a total of $400 of your own money that month. That's pretty damn cheap. I used to lose that much in a single bad trade on my personal account. And $400 is nothing compared to the upside of just a single payout from just one funded account. You're risking hundreds to gain thousands. Your downside is limited, but your upside is massive. Most traders don't go about it like this and just kind of buy evals randomly until they pass. But that's a lethal mistake. All those new accounts and resets add up, and it's always way more than you thought. Burning several accounts a week, or several accounts a day even, is a sign that you're not approaching this correctly and falling right into the prop firm trap. You're impatient, and you want to get funded fast so you can get a payout fast. Fine. I'm the same way. Who wouldn't want to get a payout fast? But the mistake is when you rush the entire process, risking your entire drawdown on a single trade, then doing that again multiple times a day. Suddenly you're so deep in a financial hole that even getting a payout or two would barely get you out of it. Think about that. You're doing all this work and going through all this stress just to end back where you started, if you're lucky. So the first thing we absolutely must do is cap our downside. We want to add risk later on when our process starts working, not at the beginning. So stay super lean until you get your first funded account and then your first payout. Then you're no longer in the hole and you have more room to move around. Now, how do we go about getting funded accounts? Well, let's focus on our first. We're going to be very mechanical about it. Since our budget only allows for 1 eval per week, it means we'll need to control risk properly inside the eval. So let's say we have $2,000 of drawdown in the eval. That means if we lost $400 a day for the entire week, we'd blow our account. Losing every single trade for a week straight is highly unlikely. But even if we did, and lost every single trade for an entire month, we'd only be down $400 of our own money. Not bad, right? So we want to be risking $400 per trade and take around 1 trade a day. It'll only take us a few winning trades to get funded, and we're well within our monthly budget. Now, some may call this slow. And you're right, it's a little slow. But do you want to be down thousands of dollars from failed evals instead? You need to start slow at first before you add any real risk. So trade that one account right, get it funded, and then move on to the next step. And keep in mind, adding risk goes both ways. It's just more harmful to you if you don't have the right process yet. If you don't have the right process and risk management with 1 eval, then you definitely won't have it with 10 more. It's not a band-aid you can put on that magically makes you profitable. So do this instead. Start with a monthly budget, whether that's $400 or whatever you're comfortable losing for the month, and calculate how many evals you can get with that. Then space the evals out and calculate how much you can risk per trade before you blow each account. What we're doing here is turning the whole thing into a purely mathematical, mechanical process. We're treating it like a business. You can do what every other trader does and burn through a bunch of evals, trade with just vibes, I guess, then get a single payout somehow eventually, and not even realize how much money you've made or lost in total. Or you can refine it down to a process like this that tells you exactly how much you're risking and how much you'll gain later on. Which one sounds more professional and makes you more money? So you might get funded right away, or you might burn through a couple of evals, but you won't be losing more than a few $100 before you hit your first payout. And that payout will immediately make up for all the losses anyway. But of course, all of this only works if you have an edge. If you don't have a proven edge, you won't be consistently profitable, and therefore can't grow and scale your accounts consistently. And trust me, you don't want to be aiming for a few $1,000 in payouts here and there. Once you're consistent and start trading multiple accounts, you'll really want those payouts to keep coming in and keep getting bigger. And there's no shortcuts to get there. Now, when it comes to trading with a proven edge, you want to make it as reliable and repeatable as possible. You don't want it to be too subjective and based on your intuition or something, because that means you need to be on point all the time for it to work. And we both know that's unrealistic. What we're doing here is stripping down every single part of this process and turning it mechanical. We want it to become a machine that reliably generates profit for us. I trade the LCE model, which is almost an entirely mechanical process that produces repeatable and reliable setups over and over. I have more videos on my channel going over the LCE model in detail, and I'll link them here so you can check them out here after this. But it's essentially a supply and demand system that targets one clean level-to-level move a day. When we enter a supply and demand level, we're looking to target the next level above or below. Then we simply take that trade, and we do this over and over again. We take the trade based on factors like trend, momentum, and price action to tell us where the price is going. So over time, this system has an edge, and it's not based on something subjective like the trader's instincts or the way the market looks and feels on a certain day. This is an edge that will never run out or let you down. It's just a machine that keeps going. All you need to do is make sure you execute your trade semi-decently, and also don't interrupt it. You don't even need to execute your trades perfectly, to be honest. I certainly don't, and I still get loads of payouts month after month. That's the beauty of it. I also dive into more detail about the simple execution rules you should follow to make this edge even more consistent and profitable to help you get more payouts easily. Even if your psychology and execution isn't that good, I'll link that video here. But I digress. Once we have a proven mechanical edge that we can execute reliably, we've just tied down the most difficult part about all this. Because the rest of it is just math and accounting, really. If you earn an average of $2,000 a month from one funded account because you can execute your edge reliably, then nothing stops you from stacking 5, 10, 20, or even more accounts and trading them the same way. The only thing that can slow you down is reckless spending, which will eat into your profits. That's the hidden fee which very few people talk about. You don't want to be gambling multiple accounts at once and burn them all, because that's a very expensive lesson. But we've already nailed spending down to a science. You can keep your expenses ridiculously low while you get funded and get the process right. Once you get the process right, you just rinse and repeat that over multiple accounts. Then you stack more payouts and get even more accounts to grow even more. That's how it's done. So now the path is absolutely clear. There are no obstacles and nothing can stop you from becoming ridiculously profitable. And trust me, this will be way better than aimlessly buying accounts and trading them in the hopes of getting a payout. There's an old saying that says, there are a lot of old traders and a lot of bold traders, but not many old bold traders. And the reason is simple. The only traders who last are the ones who manage risk like professionals and treat trading like a business instead of a lottery ticket. So get funded, stay consistent, get payouts, and reinvest that into further growth. That's how you get rich for yourself, not the firm. And if you want me to show you exactly how to apply this step-by-step inside your own trading, click the button below, and I'll walk you through the full process. So yeah, that's how you play the game. If this video clicked it for you, drop a like and hit subscribe. I drop new videos like this every week. I'll see you in the next one.